Hello everyone, welcome to my channel. In my channel, I would like to share my investment journey, which could ideally lead me to my financial independence. I'm using Wealthsimple Trade to trade all the stocks in the Canadian stock market. So this is my result for today. I have started using this app like 2 weeks ago, and I deposit around $3,000 as a start. And as you can see, for today, I get around $30 up, which is pretty nice. So the first thing I want to talk is that why we want to invest in stocks, because they have higher return than other methods. So usually we want to put our money in the saving banks. However, in the current situation, we can see that these big banks has offered us a really low interest rate, which means we nearly cannot gain any money from the money we deposit in their accounts. And the highest interest online bank that I found is this EQ Bank. So it has a 1.5% interest, which is nice. However, still not as high as the average yield of stocks. So here I use an ETF as example. So I will talk about this more afterwards. So basically what this ETF do is it mimic the S&P 500 in the US market. So the S&P 500 in the US market has always been in the increasing trend since it started. So as long as we spend more time in this market, we can assume that our wealth will continue to grow. So I think time is the most important thing. So the longer time we put ourselves into this market, the better result we will have in the years to come. So however, it is still recommended that you have a certain portion of your money as an emergency fund before you invest, because investing also have higher risks than other methods like just put money in your saving account. So if you do want to play it safely or have your emergency fund in somewhere, I recommend this EQ Bank because it offers this pretty high interest. So if you want to open a saving account with EQ Bank, please use the referral link that I put in the description below. So you will get $20 bonus when you deposit $100 into this saving account. However, we will keep focusing on talking about the stocks for now. So now we have talked about that why we want to invest in stocks, because it has high returns. Then how do we trade it? So what I do is that I use Wealthsimple Trade. The most important reason is that it has zero commission fees. So for those who don't know what commission fees are, so basically when you want to buy or sell stocks, other apps or platforms, they will charge you for a commission fee that may vary from around $5 to $9. So Wealthsimple Trade is the only, so currently I think it's the only platform that offers zero commission fees. So you can start from a small value. You don't need to like put a huge amount of money inside your account. You can start as small as you want, like as $1 if you want. So the pros for Wealthsimple Trade is that first, as I said, it's commission free. Second, it has no account minimum, so you don't need to put a certain value of money into this account in order to not getting charged. So you just won't get charged for no matter how much money is there in your account. And also it has a simple and straightforward design, and it is CIPF protected. So what is CIPF protected mean? That means basically your money is kind of secure. So if I remember correctly, I think they can protect as much as $1 million. So let's say if unfortunately, Wealthsimple Trade just goes bankrupt and it disappears, your money won't just gone with them. So your money is protected for up to $1 million by CIPF. So if you want to open a Wealthsimple Trade account, please use the referral link below in my descriptions. So by doing so, you will get $10 for free when you deposit $100 and trade for more than $100 in stocks. And if you have already opened a Wealthsimple Trade account but haven't used any referral code yet, so you can also use my referral code here by just typing into your account, and then you will also earn that $10 if you spend more than $100 on stocks. So now I have talked about the good sides of Wealthsimple Trade. However, it's still not perfect. There are some cons that we need to be aware of. So the first most important thing is that it will have a 1.5% currency exchange fee for USD trades, which means if you want to buy stocks that in the US market, you need to pay this 1.5 currency exchange fee. And when you sell that trade, you will also need to pay this 1.5% exchange fee. So, which basically means when you buy and sell, totally you will give 3% to Wealthsimple Trade. And this will not happen if you just trade in the Canadian stock market. So that's why for me, I will first start in the Canadian stock market. And another cons for Wealthsimple Trade is that the price on its app or website is actually 15 minutes delay than the real stock price. So how we can avoid this is that while we are trying to buy or sell our stocks, we can use other platforms such as Yahoo Finance. So Yahoo Finance can show you the real-time price of a stock so that you won't make any mistakes. So what this 15 minutes delay could lead to wrong is that, for example, if you want to buy a stock at $10, however, that is its price 15 minutes ago. And after this 15 minutes, the price could go up or down. And if the price go up and the stock is a little bit volatile, for example, it can go to $20, and if you use a market buy, you will buy it for $20 instead of the $10 that you see on the app. So that is something that we want to keep in mind. And whenever I do trades in Wealthsimple Trade, I will look at Yahoo Finance for the real-time price and also use the limit buy option, which I can set a price that I want to pay. So these are the pros and cons of Wealthsimple Trade. And now I would like to talk about my current situation. So basically, I invested both in ETFs, dividend stocks, and growth stocks. So for those who are not quite clear about the definition of the things, I just want to give a brief introduction of them. So first, what is a ETF? So you can think ETF as a basket. So basically, it's a basket that contains a lot of different stocks. So as the example I shown here, that is still this VFV, which track the S&P 500 in the US stock. So we can see it has this many sectors, which means when you buy one share of this ETF, you actually have a lot of portions of different stocks in the S&P 500. So with this one share, you actually have a small portion of all those big companies in the US market. So that's why we want to buy ETFs, because it is diversified, so it is safer, and also it tends to have a better and steady yield. So this is about the ETF. So for the dividend stocks, so basically dividend stocks stocks that will pay you a pretty nice dividend. So basically, we will not just gain by buy in a low price and sell in a high price. So we can also gain by just buy these dividend stocks. So as we can see this example here, that is the Ambridge Inc. So we can see it has a forward dividend yield of more than 7%, which means if you buy one share of the Ambridge stock, you will be paid for $3 and 34 cents in 1 year. And different companies will be paid in different frequency. So some will pay you quarterly, some will pay you monthly, and some will pay you annually. However, the forward dividend here shows will be the total money you will receive for 1 year. For 1 year. So that's why a lot of people like dividend stocks, because if we invest in dividend stocks, basically we can get money from them every year and or every quarter or every month, and it's pretty nice to see that you get some money flying into your account, right? So that's why I'm most focused on dividend stocks, and I will also focus on ETFs. However, I will also buy a small number of growth stocks in my portfolio. The reason why I want to buy growth stocks is because growth stocks usually will increase, the price of growth stocks usually will have a better increase than dividend stocks. So usually those companies who pay you dividends because they are already big companies, so they are steady, so they do not want to, or I can say they do not want to, but probably they will not grow very fast year by year because they are already big enough so that they are willing to take some of their earnings and share it to the holders as dividend. However, for growth stocks, most of them does not give you any dividend or give you very little dividend because those companies are usually small companies and they need money to grow. And if things goes well, their stock price will also goes up really fast, and you can earn a lot by just selling the price when it is high. However, these growth stocks are usually very volatile. By saying volatile is that their price will change more dramatic than dividend stocks or ETFs. So probably you need to be aware of that if you don't like that kind of risk. So the last thing I want to see before goes into my portfolio is tax-free saving account. So basically, what TFSA do is that nearly all your gains will be tax-free, so you don't need to pay tax for the dividend you earn in this TFSA account. And if you sell your stocks at a higher price, you have some capital gain, right? You don't need to pay tax on those capital gains. However, something you need to keep in mind is that dividends from the US stock will be charged for a withholding fee. So US stocks in TFSA is technically not really tax-free. You are paying tax to the US side. So so that's why for me currently I am just stay in the Canadian stock market. I'm not buying any US stocks for now. And also you want to know that probably you don't want to do frequent day trading in your TFSA account because CRA probably doesn't like that, and they will look into that if you do frequent day trading. So when we are do investment in TFSA, we are looking at the long term. We want this to be like 5 years, 10 years, or even more. So we are looking at a long-term return, not instant return. So if you want quick money, you want to do day trading, you want to put your money, you don't want to do that in your TFSA account. And finally, you want to be aware of your contribution rule. So every year we will be assigned new contribution rule by the government. So something I think many people are not clear is that how this kind of contribution room works. So the contribution room will only be being taken up if you put money into it. So if you put 1,000, for example, you put $1,000 into a TFSA account, that means you will use $1,000 of your contribution room. However, if this $1,000 in your TFS account, you do investment and you have some gains, it becomes like $2,000. This new generated $1,000 will not take up the contribution room that you left. So at the beginning, you input $1,000, and at the end, you goes to $2,000. So your TFSA account increased, but your contribution room, your left contribution room, will not be used by that. However, if you do take out money from your TFSA account, this will not release the same amount of contribution room back to you until next year. So if you take $1,000 out and you have already used up your TFSA account contribution, you cannot put any more money into this account. So I hope clarify this for you guys. So if you have any questions, feel free to leave a comment, and I'm very happy to answer your questions and also make more clarifications. So now I think we can have a look at my portfolio as I just start early this month. So this is my current portfolio. As you can see, I have totally deposited around $3,035 into my account, I think. And for now, I have 2,070-ish in my stocks. And I also have around $300 left as cash. So I highly recommend that if you can, please have cash as some portion in your Wealthsimple Trade. Because when you deposit money into Wealthsimple Trade, it usually will take 3 business days. So if there is some opportunities coming to you and you have used up your cash, you actually cannot buy stocks immediately. So by leaving some cash into your account, that offers you this kind of flexibility that when opportunity comes that you want to buy some stocks that you like when it is at a low price, it will be good for you if you have cash there. So you can see today I have up by around $30, and I have totally around $8 unrealized gains. So basically that means so far I actually have $8 more as of how much I have deposited. So this is my unrealized gains. So I will also track my dividend incomes once I get paid. So since I just started like 2 weeks ago, so I don't have any dividend yet. However, I do anticipate I will have dividend in the coming months, and I will share that result with you guys, and then we can see how that dividends kind of build up, and we will accumulate more and more as time goes. So time, I think, is the most important thing in the timing is the most important thing in an investment. So yeah, and I also have this money already salary, so it will shows like how my money will works for me to generate more money. So far it has no salary here. However, I do anticipate this will increase in the coming days. So here's my balance breakdown. So I have around 90% of my money used to buy stocks and around 10% left as cash. I think in the future I may increase the cash position because stocks price change all the time and you cannot predict when is the best time. So have some cash will always be a good choice. And here is my portfolio performance. As you can see, the reason why I deposit $3,000 at the beginning is that I want to have a diversified portfolio, because diversify can minimize the risks. So you can see I do have some stocks does not perform pretty good, like they have -5% or even close to -10% down. However, my other stocks kind of save it and finally leads me to have gains in total other than lost. However, all these stocks that I choose, I did some study on them, so I actually looks good for all of them. So I think in the long time, they will uh, they will perform pretty good. So it's just because I have just been in this kind of investment for 2 weeks. So I think it could be normal that they goes down. So we'll see. So I think in the long time they will all perform well. And down here is the sector breakdown. So you can see for now I have invested a lot in the financial service, basically the big banks. So 30% of my portfolio are financial services. So, and also 10% is ETF. So in the future, I want to increase the portion of ETF. The reason, as I said, ETF basically is a basket. It contains a lot of different stocks. So it is already diversified. So that's why I want more ETF in my sectors. And I also have other industries such as healthcare. This is just one growth stock that I pick, and some in the energy sector, some in the consumer defensive, the industrial, utilities, communication service, and real estate. So I believe that as long as I have this diverse portfolio, in the long term, I should get a good return. And also here will be my monthly dividend track. So I think this will start to record once we enter March, because I think March will be the first month that I get dividend. So yeah, this is basically my current situation, and I plan to update my portfolio and also talk more about the stocks that I buy and sell. Talk more about these dividend stocks in my coming videos. So this is my first video on the YouTube channel. So thanks for watching it. And if you like my video and you think that you have learned something from it, do please generously press that like button, that will help me a lot. And also, if you want to hear my future videos, watch my future videos, do please click that subscribe button. So thanks a lot, and I'll see you in the next video.